Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoan, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode.
All right, let's kick things off with the latest update from the Canada Mortgage and Housing Corporation. They've just released their summer forecast update for the housing market. Janine, what do you make of it?
Thanks, Steve. The CMHC's forecast is quite interesting, especially with the current economic climate. They're predicting that housing starts will continue to moderate in the second half of the year. This means that while we'll still see new homes being built, the pace might slow down a bit compared to the first half of the year.
That's right, and according to the CMHC, this moderation is due to several factors, including higher interest rates and ongoing affordability challenges. It's important for investors and potential homebuyers to keep these factors in mind when making decisions.
Exactly, Steve. But even with these challenges, the forecast also indicates that demand for housing will remain strong, especially in urban centers. This is driven by population growth and the ongoing trend of people moving to cities for work and lifestyle opportunities.
And speaking of demand, the CMHC also noted that rental markets are expected to stay tight, with vacancy rates remaining low in many areas. This could mean higher rents and more competition for rental units.
Yes, and for those considering buying, the report suggests that while prices may stabilize, they won't necessarily drop significantly. So, if you're planning to buy a home, it's still crucial to have a solid financial plan and perhaps even work with a mortgage broker to explore your options.
Absolutely, Janine. It's all about being prepared and informed. The CMHC's update is a valuable tool for anyone looking to navigate the housing market in Ontario. Let's keep these insights in mind as we move forward in today's discussion. Let's delve into a really intriguing report that was just released by WAHI, a Canadian real estate group. It highlights some significant price drops in the Durham region, with certain houses seeing a reduction of $1 million off their asking price. Janine, what are your thoughts on this substantial decline?
It's quite a shift, Steve. The report shows that the Durham region is experiencing some of the most notable price drops in the Greater Toronto Area. It's important to consider how this affects both potential home buyers and current homeowners. For buyers, this could be an opportunity to enter the market at a more accessible price point. But for sellers, it's a challenging scenario, especially if they purchase their homes at peak prices.
Absolutely, Janine. WAHI's report specifically mentions the Rougemont neighborhood in Pickering, where the average home price has plummeted from over $2 million in 2022 to just over $1 million in 2025. That's a dramatic change and could signal a shift in market dynamics. It's crucial for investors and sellers to understand these trends and adjust their strategies accordingly.
Right, Steve. And it's not just Pickering. The Northwood area in Oshawa is seeing similar trends, with the average home price dropping from $1,350,000 to $751,000. That's almost a 50% decrease. It highlights the volatility in the market and the need for buyers and sellers to stay informed and adaptable.
Indeed, Janine. It's a reminder of how quickly market conditions can change. WAHI's analysis suggests that this trend is widespread, with 289 out of 344 neighborhoods experiencing similar price drops. While this might concern homeowners, it also presents opportunities for those looking to invest in real estate or expand their property portfolios.
And let's not forget the human element, Steve. For many, a home is not just an investment, but a place of personal significance. These price changes can be emotionally taxing for those who have seen their property's value decrease. It's vital for individuals to seek guidance and make informed decisions during these times.
Absolutely, Janine. Navigating these market shifts requires careful planning and insight. As we continue to monitor these developments, it's essential to stay updated with the latest trends and reports like this one from Wahi. Let's keep this in mind as we move forward in our discussion today. Today's economic landscape is heavily influenced by lasting tariffs, and this is shaping Canada's economy and housing market in 2025. According to the Canada Mortgage and Housing Corporation, the ongoing trade tensions, alongside slower population growth and rising unemployment, are contributing to a cooling housing market. Janine, how do you see these tariffs impacting the housing sector?
Well, Steve, the impact is quite significant. The tariffs are creating economic uncertainty, which is making both buyers and developers hesitant. This wait-and-see approach is leading to a slowdown in new construction, particularly in high-cost areas like Ontario and British Columbia. It's a challenging situation for those looking to buy or sell as the market is less predictable right now.
Absolutely, Janine. The CMHC's outlook suggests that home prices are expected to fall by about 2% in 2025, with larger declines in Ontario and British Columbia. Developers are delaying projects due to high costs and weak demand. It's a reminder that the economic environment can directly affect market dynamics. For those in the industry, being adaptable and informed is key.
And while home prices are decreasing, it's important to note that affordability remains a significant issue. Despite the drop in prices, many potential buyers are still priced out of the market. This is especially true in high-cost regions where the cost of living and housing remain elevated. It's crucial for those looking to buy to carefully consider their financial plans and perhaps consult with a mortgage broker.
That's a great point, Janine. The forecast also indicates a gradual recovery in 2026 as trade tensions ease and economic conditions improve. However, until then, the housing market is in a period of adjustment. Rental markets are starting to ease slightly as more supply becomes available, but the demand is softening. This could lead to increased vacancy rates and slower rent hikes.
Exactly, Steve. The rental market is experiencing a bit of a shift. While rents are still rising, the increases are not as steep as they have been in recent years. This change is partly due to slower household formation and lower immigration, which are putting downward pressure on rental demand. It's a complex situation that requires a nuanced understanding of both local and broader market trends.
Indeed, Janine. The CMHC report highlights that ongoing tariffs on construction materials, such as steel and lumber, are keeping building costs high. This is further hindering housing supply and making it difficult for developers to move forward with new projects. The result is an environment where many households are still priced out and builders are hesitant to break ground.
And beyond the numbers, Steve, these economic pressures have real human impacts. For many, a home is more than just an investment. It's a place of personal significance. The uncertainty and economic challenges can be emotionally taxing for families and individuals who are trying to navigate these changes. It's essential to approach these times with both information and empathy.
Well said, Janine. As we continue to monitor these developments, it's vital to stay informed and prepared for the changes ahead. The housing market is indeed in a period of adjustment, but with the right strategies and insights, individuals and businesses can navigate these challenges effectively. Let's keep these insights in mind as we move forward in today's discussion. In recent news, the Real Estate Council of Ontario, known as RECO, has appointed a new Chief Executive Officer. Brenda Buchanan, who was serving as the interim CEO since February, has officially taken on the role. This decision follows a national search to find the right leader for the organization.
That's right, Steve. Brenda Buchanan brings over 20 years of experience in the Ontario regulatory environment, having worked in both the public and private sectors. Her background includes serving as RECO's Chief Operations Officer and being part of their senior management team, where she led strategic and business planning processes.
The board of directors at RECO expressed great confidence in Buchanan's ability to lead the organization. Katie Steinfeld, the chair of RECO, described her as a bold, forward-thinking leader with a vision to bring innovation, transparency, and consumer trust to the forefront of real estate regulation in Ontario.
It's exciting to see a leader who is not only experienced, but also committed to deepening collaboration with the Ontario government and stakeholders. Buchanan herself mentioned her eagerness to support the real estate profession and ensure strong consumer protection. Her leadership marks a new era for RECO and the real estate sector in the province.
Buchanan's experience extends beyond RECO, having worked at an Ontario-based industry regulator and as an executive with the Canada Lands Company, a federal crown corporation. This diverse experience positions her well to guide RECO through the evolving landscape of real estate regulation.
Yes, her appointment is a significant step forward for RECO. As the real estate market continues to face challenges and opportunities, having a leader like Buchanan who understands the complexities of the industry will be invaluable. Her focus on innovation and consumer trust aligns well with the needs of today's market.
Absolutely, Janine. The Real Estate Council of Ontario plays a crucial role in regulating real estate agents and brokerages, ensuring they comply with the law to protect consumers. With Buchanan at the helm, we can expect a continued emphasis on these priorities.
It's reassuring to know that RECO is in capable hands. As the market evolves, so too must the regulatory frameworks that govern it. Brenda Buchanan's leadership promises to bring about positive changes that will benefit both the industry and consumers alike.
Well, that wraps up our discussion on the Real Estate Council of Ontario's new leadership. It's been an insightful episode with plenty of valuable takeaways. Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your home ownership goals. Catch you next time and stay informed with the latest industry insights.